because you were living in the car, how do you end up finding a job in Silicon Valley?
Actually, this is another one where people draw a straight line and a path that's actually much more jagged. I'd been working on a company while I was living in the car, and that guy that read the blog post actually funded the company. In retrospect, there are a few aspects of the idea that were really bad, but the notion was, let's create a crowdsourced newsroom. So there's all this social media content, and there are reporters that it's their job to like read it and try to make sense of it and put out an article. But I noticed a bunch of times that the journalists who were trying to parachute into a story just didn't have the context they needed. There are people on social media who were experts at that. And sometimes it was about geography where I understand that place better than you. Anyway, so the idea was, let's allow people who know a space really well to do the work of journalism without being a journalist. It actually worked really well. The problem was that then you have a news publication that is crowdsourced, and it's not that much better than anything else out there. And it's really difficult to make money as a news publication anyway. And all the publications that are still around make their money by gaming social media for likes and clicks. And we didn't do that. We just wanted to create a better publication. And it was better in a way that 10% of the people who had heard about it really loved, but that's not enough to make a business. So it didn't really matter at the end of the day. The other thing that we could have done is sell a newswire or fact checking to news organizations. But it was basically us asking news publications to pay us to tell them when they were wrong. And they don't want to pay us and they don't want to be told that they're wrong. So neither of those things worked. After that failed, I got a job in Silicon Valley. I didn't know how to code. I was an incredible coder, but people that I'd met while I was doing that introduced me to other people who hired me. And then I actually did a lot of that from Utah. And then I moved out to Silicon Valley and stayed there quasi permanently.
But there was a period, right, where you were living in that small town Utah and traveling to Silicon Valley. And there must have been very disorientating just because of the people, the opportunities that you were seeing every single day.
Yeah, it was completely different worlds. Yeah, I was living in small town Utah, and then I'd spend a bunch of time in Silicon Valley. I still wasn't integrated into Silicon Valley the way that I am now. There weren't a ton of people for me to meet with. I didn't have a network. I didn't have a brand yet. So there are a few random people who would meet with me and few investors, but very different world that I'm in today. I would spend time in Silicon Valley, but I still felt like I was looking at Silicon Valley from the outside instead of being a part of it. And so when the company ended up failing, I wanted to be a part of it. I wanted to actually go work in a Y Combinator backed, Andreessen Horowitz backed company. And I optimized for that over really anything else. And, I only lasted a couple of years in that company before I started Lambda School. But yeah, that's the much messier path to get to where I am today.
So how did the whole concept of Lambda come about?
There are a bunch of different things that kind of came together. So the company that I was working at was a lending company. Like I didn't understand how money worked when I joined at all. It was really like money was the thing that I spent to live so that I could try to figure out how to do what I wanted on the side. But I didn't understand how risk worked. I didn't understand how the stock market worked. I didn't understand how lending worked. So I spent a ton of time with the risk and capital markets teams. I read every investing book. I started investing in the stock market. I started analyzing companies. And so that 18 months was really about me understanding finances as deeply as I could, and financing, and how Wall Street works, and how debt works, and how asset management works, and all of that stuff. And we're a lending company. Where does this money come from? And how are we lending it? And who gives it to us? And how much do they expect in return? And what happens if the money doesn't get returned? So just really trying to understand finance from first principles. And then the other thing that I was interested in is kind of helping people. I felt like I'd made it. I was successful in many ways. I was getting paid really well. I was working at the company I wanted to work at. And I wasn't making a ton of money. It was like barely above six figures. But coming from small town Utah, the average income in the town that I moved to San Francisco from is like $30,000 a year. And so people didn't adjust for cost of living. They're just like, oh, you you're making 4x what everybody else is here. Like, how did that happen? And people would ask me, how do I do what you did? And I didn't have a good answer. You can't say, well, first you need to go live in a car, and then you need to get somebody who reads your blog. And then at the same time, my little brother was an early employee at one of their first code schools. They were doing really well. There are things that I admired about that company. There are a lot of things I didn't admire about it. And I have utmost respect for the founder of that company, but I felt like some of the incentives were off. Some of the things you had to do to make the business work were weird to me. Specifically, there are a lot of people that went to that school and didn't end up finding a job and ended up stuck with loans. And the founder of Grasswire, he had $200,000 in student loans and had taught himself to code as a way to pay off those loans because he had a law degree, but he graduated in 2008 with a law degree, which was the worst time you could possibly graduate with a law degree. And so I was very cognizant of how difficult loans can be in an environment where it doesn't work. And I was surrounded by loans and risk management and all of that stuff all the time. So originally I started what is now Lambda School I felt like I could do a better job teaching people to code. I could do it online, so I could do it at a lower cost basis. And I was also kind of burned out on VC because I had bad experience with VCs. VC backed company, we'd only raised like $650,000. In today's world, that's not even a VC. That's like a small pre-seed round. We call it a Series A, I think at the time. We're like, oh, we need to go raise our Series B. We just had no idea what we were doing. And so originally started Lambda School just as a way for me to start my own thing. And it felt like I can do a better job teaching people to code than some schools can. I can do it online, so it can be a little bit longer because I felt like the 12-week code school was just fundamentally too short. I can have a lower cost basis and I won't have to raise VC ever. And if it's, just me and a friend, and we can charge $10,000 a student, we're only ever going to have 50 students a year. And then we're each going to pay ourselves $250,000 and life is going to be great. We were on that path. I mean, our first cohort, I did all the marketing and my co-founder was doing all the teaching. We got 20 people signed up. They paid us $7,000 to $10,000, depending on which one they did. Neither of us started taking a salary. We just stored that away just in case for later days. And it was working. There's another universe where we just decided to keep doing that. And each of us paid ourselves $250,000 a year and we trained 50 students a year. But along the way, having spent years thinking about risk and risk management and insuring risk and all of that stuff, I would talk to students or prospective students for our, new school and say, hey, why don't you pay us $10,000? And they would say, well, I don't have $10,000. Like the entire purpose of me learning to code is so that I can make enough money. And after that, sure, I'm totally fine to pay you $10,000 if I'm successful. So I started looking at loans and I still have the emails where talking to lenders and saying, hey, what would it take to offer loans? And well, how many students are you guys going to do a year? And I say 50. And they're like, we can do that, but you're like the smallest school ever. So it didn't end up going that path. But as I talked to prospective students, there were a bunch that said, it's not just the loan, right? Like I can get a loan. It's if I get a loan and it doesn't work out, I'm in trouble. Is there another way that I can show you how likely I am to get hired? Can I get a scholarship and can I pay you back after I'm hired? And so a couple people, we ended up saying, what if you'll pay me $1,000, then I will pay for the rest, pay myself. And then after you get hired, you pay that and maybe interest or something. And people are like, yeah, that makes a ton of sense. And so we had in our second cohort, we had like 15 people signed up, which was enough. That's all we needed. But I was like, if we add another 5 people, it won't make a difference to anybody's experience. And we're teaching the class anyway. Should we find a way to throw 5 more people in? My co-founder said, we had a little mailing list going that if you want to pay us $1,000 up front, we're going to try something new where we'll float the rest and you pay us back after you get hired. So we had this little email list that we would email once a week. And every time we did, we would get a person or two to apply. And we emailed that mailing list and there were 200 people that were like, oh, I'm in. And I was like, oh, I didn't expect that to be the response. We definitely can't do this for 200 people. But then we started talking, well, actually, what if we did it? What if we did it for 50 people? Me and you, let's do it for 50 people 4 times a year. That would be $200,000 in upfront deposits. We each pay ourselves $100,000, which is enough. We won't have any money for marketing. But then, like, that's actually pretty cool. Our incentives are totally aligned with the students where we don't make our money unless you get hired. And then that kind of expanded into, well, if we have a few people that pay up front in full, then we can float the rest. And what if we made it zero? What would happen? What if we said we're going to own all of the risk? Like that probably signals confidence to students that we're serious and our incentives are aligned and let's see what happens. So we sent out an email, said, hey, we're going to try a crazy experiment where it's nothing upfront, but you're going to have to pay us on the back end and even a little bit more. And we had 2,000 people be like, okay, I'm in. And that's when we're like, oh, that's very different, right? So originally, we said if we could find an investor, just gives $100,000, we would actually be able to float the rest ourselves. We can live on ramen for a year and we can train 400 people. And then if those 400 people are paying us back, maybe 80% of them get hired. Oh my gosh, that's so much more money on the other side. That's a risk that you can't take if you're too big. You can only take that when you're a couple people with a low cost basis sitting in a basement. And so we're talking about where could we get $100,000? It felt like an infinitely large amount of money at the time. Yeah, we spend that in a day at Lambda School today. But we said we could apply for Y Combinator. Is this even a VC backable thing though? So we ended up applying to Y Combinator and it's by the skin of our teeth we got in. Y Combinator changed
That's
everything for us.
that's interesting for me because you said earlier that you were burned by VC. I think that's one point where you said you never wanted to raise VC again. So that mentality completely changed.
Yeah, and that was the conversation we had. Neither of us wanted to particularly raise venture capital, but we felt like Y Combinator was different enough that I was working at a YC company. We knew other YC companies. And I basically said, look, these guys are good people. It's different than the VC experience you've had in the past, which for the majority of the time continues to be true today. I just had a really weird experience. But it was the trade-off of, and there have been several times throughout the Lambda School experience where we had an opportunity to not try to go bigger or to not, in my mind, make as much of an impact. And for us, it would have been fine financially. But we decided that this is something the world needs enough that we should be willing to take the risk. What if it fails? We can just go back to what we were doing before. So it's not a one-way street. And so when we were in Y Combinator, we started growing a little more quickly, but we were still cash flow positive through most of Y Combinator, including paying ourselves a small salary, not maybe enough to live on. We both had a little bit of savings from some other stuff. I had put all my money in Tesla stock and it blew up and I'd written a book and sold that. And my co-founder taught himself to code and was living in a different part of small town Utah in his in-laws basement. And so his expenses were zero. So we both, didn't feel like we needed very much to live on. And Lambda School is profitable. We got to this point where we were deciding almost at demo day, which for Y Combinator is when you have an incredible opportunity to pitch to hundreds of investors, probably the best fundraising chance you'll ever have. And we were talking with our Y Combinator partners about, do we even want to participate in demo day? And we were still not quite anti-VC, but nervous about it at a minimum. We built a forward-looking financial model that basically said, what do we expect the dilution will be from raising money? Call it 15, 20%, something like that. So, okay, say we're going to sell 20% of the company. What happens in each of these paths if we don't raise money and if we do raise money? I mean, pretty quickly, we realized that if we were willing to raise a little bit of money, that Lambda School could have literally thousands of times the impact that it would have had if we didn't raise VC. So I feel my first company, the goal was raise VC because that would be awesome. But this company was very much let's figure out what type of financing is right for the business and let's make a decision very intentionally. And I think that's something that all founders should do, even now. I talk with founders that are bootstrapping and my advice is keep doing that. Don't raise VC. It depends on what the first principles of the company are, what the unit economics are, what the cash needs are. And so I had no desire to raise VC for the sake of raising VC. And we wanted to have a profitable company that was a fantastic business, and a little VC kind of made that easier along the way, which by the way is the easiest way to raise VC. If you're talking to investors and you're saying, yeah, we could raise from you, but we don't need to, it would just let us get bigger faster and have more impact. You'll never raise an easier VC round than when that's the truth.
Do you feel then that that was the perfect time for you to raise retrospectively?
Yeah, I mean, if that's the story when you're talking to VCs, we don't need you, but we can be way more impactful if we work with you. That's the best story you can possibly tell. The hard part about raising in the early days for us was actually like, isn't this just a marginally better code bootcamp? Isn't this the same thing that 100 other companies have done? How does this get big? And we had to point out that actually aligning incentives of the school with the student is meaningfully different. It takes a completely different approach. And if it works, it starts to take over everything in a way that a bootstrapped pay us $10,000 and we'll train you to code company cannot. And I think that actually remains true to this day, that it's a fundamentally different model that is much harder to make work than we realized at the time. But when it works, you can't compete with it as a school if you're not willing to take on the risk. And I can philosophize about this for hours, but in many ways, what happened to education in the United States is in the 1980s with Title IV, the government basically said, we will give all sorts of money and free loans and everything to the university system. So we're all in on the 4-year, everybody go to college university system, tons of free money, infinite debt. And that made everybody start to go to college. That made the prices go way up. It made it feel like there was only one system in the United States, whereas in a lot of countries, there's a university system, which is for people who want to do research or philosophy or more liberal arts stuff. And then there's a vocational school system where if you're going to be an engineer, you go to an IIT or you go to a technical school. In Ukraine, there's university and college, and they're two different things. In the US, it's all just one. We want to bring that system to the US. And we want to bring a highly effective vocational system to the US because when I go back to central Utah and talk to people there, 4 years of school and $100,000 in debt doesn't make sense for people making $30,000 a year. It's just fundamentally not a right move. You can risk it all and hope that on the other end you make enough to pay off the loans, but if it doesn't work out, you're financially ruined forever. So it just doesn't make any sense to me. And then you have a code school that might only be $15,000, but you still have to move somewhere. You still have to spend 3 months, and the percentage likelihood that it works out is pretty high, but it's not 100%. So what happens if it doesn't work out? And a rational person, you're not willing to, if there's a 90% chance that you double your income and a 10% chance that you're financially ruined for life, it still might not be a rational bet. So we had to fix the incentive structure of vocational schools. And now we're actually just starting to make that work sustainably. And then it's a matter of let's do this for everything and everybody everywhere. That's been the journey of Lambda School. We're trying to create a new system of education, not just a school, a new system of education that doesn't exist in the US and really anywhere else either, once you layer on the risk management piece. In retrospect, if we wanted to do that, and if we wanted to run a slightly better code school, we didn't need to. I'd probably be making more money in that path than I am now in the short term, but the impact and the future would be much less exciting.
So was it you coming to present this new way of learning something that excites at Y Combinator? Because you had been teaching your own coding school for a couple of months, and then you had an insight into how people wanted it to be completely de-risked. And then you went to Y Combinator. So what was that unique advantage that both of you were bringing where they decided to invest in you?
So when we interviewed at Y Combinator, normally you have one 10-minute interview, and then right after the interview, like an hour after the interview, they call you and it's yes or no. So we had our first 10-minute interview in Y Combinators in Mountain View. And then we were done. We said, okay, we did it. Let's go get pizza in Palo Alto, 25 minutes away. So we went out, we ordered pizza. We were waiting for the pizza and we figured we were done. And then we got a call from somebody at Y Combinator and said, hey, can you be back here in 20 minutes? We need to interview you again. You're on the margin. So we paid for the pizza, didn't eat it, just ran back to Y Combinator, had another interview, and they said, okay, this time don't leave, go sit on those couches. We have a couple other companies we need to interview, but we'll just tell you in person whether you're in or not. And so, we waited on the couch. It was 20 minutes, then it was an hour, it was an hour and a half. And we're like, do we need to talk to somebody? Is this like a test to see if we're too submissive and we'll just sit on the couch and wait for things? Or again, and then they came out again and said, all right, we're still on the bubble. We need one more interview with you guys. So same thing, went in, interviewed. They're basically trying to figure out, is this different than the other 100 code schools that exist? Yeah. And there's a part of it that we were entirely online versus in brick and mortar locations. So you can acquire more and different students. You can do things a little bit differently. But really, at the end of the day, it came down to actually a school that holds the risk itself is meaningfully different than a school that doesn't. And if you're a school that doesn't, it's really difficult to start to say for 10% of the students, we're willing to hold the risk, because the other 90% will say, well, wait, why just those students? Why not everybody? Basically said, look, this is going to be really difficult to make work, but if it works, it takes over everything. So we had that fourth interview now. They said, all right, go out on the couches. We're going to talk amongst ourselves, and then we'll come tell you whether it's a yes or a no. And they came out 20 minutes later, said, we need to talk to you one more time. We're still not sure. So we had 5 Y Combinator interviews. And that time they brought in all of the ed tech people, all of the people that knew code schools really, really well. There's a panel of, I think, 7 or 8 Y Combinator partners. This is not the normal like Y Combinator interview experience. It's normal 10 minutes and yes or no. And we talked for 20 minutes and they were probing every weakness of Lambda School in every way. And I said, all right, you're good to go. We'll call you tonight. So we went to a hotel down the street and we got food, and we were like, what, at this point, we've done everything we can. And certainly like if we were in, they would have just told us. So we're probably out. Let's go figure out how to do this on our own. So we spent the rest of the night figuring out how to scale up, bootstrapping. I mean, when you're 2 people running a company like that, there's barely enough time to like think ahead. You're just managing all the day-to-day stuff. You're getting bank accounts set up, you're getting registered in the right states, you're getting payroll for the 2 of you set up. And we'd started a part-time class, which was a bad idea because now we were literally teaching for 12 hours a day and then trying to do all the other stuff outside of those 12 hours a day. So my co-founder had flown in from Utah, so he was staying in a hotel room. And I was like, it's already 10:30. We've got to head home. I've got to head home. Like, I guess they're just not going to call us. I don't know. And right then they called us and told us we were in. So we got in to Y Combinator barely and by the skin of our teeth, and with some level of skepticism about whether it makes sense. But I have the utmost respect for Y Combinator, and it was a game changer for Lambda School in ways that many people don't appreciate. It changed the way that I thought about Lambda School. It changed the way that we were executing, and not, just should you raise money or no, but actually, what does Lambda School look like? How does it operate? Very fundamental things that we discovered there that I don't think we would have discovered on our own.
You had access to Jeff Ralston, Daniel Gross. What was your big takeaway from your time with Y Combinator?
So Jeff Ralston is now, I think, the
President.
president of Y Combinator.
Yeah.
And Daniel's now started another company, but they were our partners. They're the 2 that we spent a ton of time with. There are a few times that were really important. The first thing that those 2 did is help us not get distracted. There are all sorts of things happening that seems a little silly now, but that was in the middle of the ICO craze. And people were saying you should create a Lambda School token and you should have an offering, and you should, instead of investing in students with traditional paper, you should tokenize everything. And I was really interested in that. I love crypto, but the infrastructure wasn't there. And if we would have done that, it would have been a distraction that killed us. That was more with Daniel, who was also very into crypto and following the space, but had seen like those waves come and go. And that's always something you can do later. I was really excited about it, but that was adding risk to the company where we had more than enough risk already, and we should be focusing on taking the risk away. And then probably the most impactful single investor meeting that we've ever had at Lambda School. Actually, there are a couple that are in contention with it, but this is true for a very long time. It was me and my co-founder, Ben, talking with Jeff Ralston, and we were like, yeah, we're going to do cohorts back to back. So we have our first cohort of 40 people, a few people paid up front, so it's profitable. We extended the length to 6 months so that we could get all the education that we wanted in. And we're like, so 6 months from now, we'll start to get results and we'll start to know what the cash flow of Lambda School will look like. And we'll start to see outcomes. And he was like, well, that's really slow, right? You're only going to train 80 people a year. Let's extrapolate that out. How many people can you train in 10 years? And it's like 800. Okay. Would you be happy having trained 800 people within 10 years? Let's say they all get a job and they're all paying you $10,000. You can make that amount of money over 10 years. What if you started another cohort next month? And I had not even considered the fact that we could have multiple cohorts running simultaneously. And he's like, that's important for two reasons. One, you could just make the cohorts enormous. And we were at Y Combinator, which does cohorts twice a year. So, it's like, yeah, we're actually following a really good model and you can just scale the cohort size when you need to. But one of the most difficult things about Y Combinator in the early days is if you are only graduating cohorts every 6 months, you're going through one iteration of the curriculum and you might tweak it, but you're going to have 8 iterations between now and 10 years from now. If you start a new cohort every month, you will have 12 times, 10 times the iteration cycles. Which said, okay, well, what would it take to start a new cohort next month? So we ran all the numbers, said, well, we'd have to hire 2 new people. And that makes it so that we either have to get more people paying up front or we have to raise money. It's so funny looking back. We're like, Jeff, if we can't raise $25,000 at demo day, then we won't be able to teach out with these students, right? We would go bankrupt. So I'm not willing to take that risk. And Jeff was like, Austen, if you need $25,000 to make this business work, and that's the delta, he basically said, you have free $250,000 from me if you can't raise at demo day. I think he might have said something like, and it's non-dilutive. I'll just give you $250,000 at demo day. A little bit of that is charity from Jeff Ralston. A lot of that is him knowing that there was 0% chance that we couldn't raise at demo day. But in a funny way, like him saying that was very much like me telling Lambda School students, you will only pay for this if you're he eliminated the risk for us in the same way we eliminate the risk for the Lambda School students. So having that in the background, I now can take risks that make sense for everybody that I wouldn't have been able to do without that. And I would wonder if Jeff even remembers that meeting and I'm sure that I'll give you $250,000 was said somewhat sarcastically, but for me, that was meaningful. Raising $500,000 for the first company was tremendously difficult and took 6 months. And we ended up raising $4 million in 2 weeks after demo day. So it wasn't necessary and was nowhere close to necessary. And now we've raised $120 million. But at the time, that was really impactful.
You mentioned the de-risk part. The whole thing lies on this thing called the ISA, which is, I think, quite unique to the States. And I actually read that there were critics like Senator Elizabeth Warren who said that the ISA actually carries pitfalls of traditional private student loans with the added danger of deceptive rhetoric and marketing. I wonder what your thoughts are about that.
Yeah, it doesn't make any sense to me, honestly. The argument that Elizabeth Warren has against ISAs is that people will not understand the terms and that they will end up being burned. I don't know. First of all, I feel the terms are pretty straightforward. Like you pay us a percentage of your income if you're making more than 50,000 annualized. Like it's not that difficult to understand. If that is abusive, a student loan is incredibly abusive. All of the arguments against ISAs that the Warren camp put out are, well, what if it doesn't work? Then students will have to report their income before the ISA is forgiven. Whereas with a normal student loan, it's just never forgiven. So is it better to tell somebody like you owe this no matter what? Or is it better to tell them you owe this if you're successful? And if not, you have to report your income so we can verify that you weren't successful and then it's forgiven. In my mind, that's way more forgiving than the other. I think over time, loans and ISAs will converge. So an ISA is a few things. It's an advance of money so that you don't have to pay money out of pocket. It is insurance that if the school you're attending doesn't provide the outcome you're looking for, you don't have to pay. And then on top of that, it's a little bit progressive where if you make more money, you pay more. If you make less, you pay less. I don't know if that third piece will be able to, that's the one that people have the hardest time with. People are fine with interest. They're fine with guarantees. Different people don't like the fact that if you make more, you pay more. I think it actually makes a ton of sense. And feels a little weird to me that the progressive folks who advocate a tax policy that does exactly that are fighting that. But I think at a minimum, at the end of the day, what will withstand the test of time is some advance of money where if it doesn't work out, you don't owe anything. And that's the most critical piece of an ISA. And you can structure that out of loans. You can structure that out of new financial agreements. In some states where the regulations are different, we've structured that out of a retail installment contract. So the loans are going to be the same. It will evolve over time. But the most important aspect of an ISA is the guarantee. And my lawyers don't like it if I use the word guarantee, but it's the alignment of incentives. If it doesn't work for you, you don't have to pay. And that is a complete game changer in education. And there are ways to bring that to other countries that aren't even based on an ISA, but guaranteeing outcomes changes everything.
How COVID has impacted the way that you're running Lambda. You said earlier in this article with Protocol that you were nervous about how the perception of online education would be harmed because people wouldn't be doing it right as a result of studying from home.
Yeah. So building an online school versus building a physical school are super different. Online schools have to have a lot of stuff built into them. So my nervousness was around the idea that if your kid is used to going to physical school and they're going to move that online at the last minute, it will probably be a bad experience. That definitely played out. A lot of people had really bad experiences with online schools. The impact to the notion that online school doesn't work was actually the opposite of what I anticipated, because some schools thought about it from first principles and did it really well. And some people realized, oh, I can learn even faster in an online school environment than in a physical environment. So I'm excited that that didn't seem to pan out the way I was nervous about.
Well, thank you so much, Asta, for your time. I normally end with these questions. So the first one is this: do you feel like you have found your why?
I think so. Yeah. I mean, helping people increase their incomes is something that I could work on until I die and be perfectly happy.
And what kind of legacy do you want to leave behind?
I think the most important thing for me is a legacy where people feel like they can actually fulfill their potential. I feel like the average person and far too many people are living far below their privilege, far below their potential. And that's sad. So I want to fix that.
What do you think are the most important qualities of a successful person?
Oh, this one I actually think about and study all the time because we're trying to predict that within Lambda School. This one is harder to show in the data, but I actually think the single most important trait is whether or not a person believes they will be successful. And everything kind of hinges upon that, which is interesting for a bunch of reasons. But yeah, whether or not you believe you'll be successful.
Where can people go to find out more about you and Lambda School?
Lambda School, lambdaschool.com. Me, I'm austinallred.com or at Austen, AUSTEN on Twitter.